Hello. Hello, everyone. Welcome to the discussion for today. So we're going to be diving into some key issues affecting the market and also do some analysis to see where things are heading in the next couple of months or later part of the year or even going forward, projecting to 2027, 2028, or 2029. So I think the key topic for discussion today is the Bitcoin 4 year cycle dead? Is it dead or still alive? Is it dead? Is it gone? Is that something that we consider? Is the Bitcoin 4 year cycle dead? So I'm going to be sharing my screen here so you can see the screen. If you are joining from TikTok, um, you may not be able to see the screen today. Join as a guest, invite. Okay, yeah, welcome. So let's share the screen here. Indeed. Okay. So how's everyone doing? Today is Farm Sunday. I hope you are in service. This year has been going so fast. Can't believe today is 29th of March already, 2026. I mean, we just started the year uh 2 months ago, you know, 90 days ago. Look at where we are today. Okay. So let me know if you can see the screen. I don't know. Maybe I can turn the camera a little bit so that you see the setup here. It's not working this way. I mean, I may have to show us the two screen that we are using today. Okay. So let me give you a view. So here is the view. So yeah, that's the view. But you're on TikTok, you may not be able to see the view for today, but that's the view. So let's go back here. So yeah, bear with me. I'm still setting this up. Okay. King. Great. Okay, I think it's good now. So yeah, let's dive right into it. Good reception. Okay, yeah, that's good. Reception. Yeah. Okay. Thank you. Thank you. That means reception is good. We're good to go. Okay. Oh, window. So let's share this screen for now. Okay, share screen. Great. So is the Bitcoin 4 year cycle dead or is it dead in 2026? You know, we're going to do some data driven market analysis today, looking into where things are, what's going to happen in the next couple of months or even going into 2027. But remember, this is my own opinion. So you also do your own research. I'm just sharing my own opinion here. We're going to look at the fear and greed index. It's about 13, I think, today. So we're going to look at that. Uh, Institutions versus traditional cycles, how things are moving. ETFs, is it ETFs inflow and outflow? How is that impacting, you know, price of Bitcoin or price of cryptocurrency? Okay, so next. So fear and greed. We are about I think 13 right now. This was last seen in 2020, 2022 bear market. So take note of this. I'm going to show you a chart right now. Uh, so the last time we saw this was 2022 during the bear market when the fear and greed was 13. So on the chart, let's go to the chart, fear and greed index. So go to the chart. Create highlights. So sharing. Okay, I'm just putting up the chart here. 1 second. Share screen. Go back. Okay, yeah. So, this, yeah, okay. So can you see the screen? I think now we've just created a loop. Look at this. It's beautiful. It's an infinite loop right now. When you share the screen, inside the screen, it becomes an infinite loop. I didn't know that. Look at that. Okay, now let's go to fear and greed index. So let me know if you can see the screen. So today is actually at 9, extreme fear, number 9. That's one of the lowest, extreme fear, number 9. So we're gonna pull up let's go to the chart. So here, what is this? Get out of here. Okay. So this is the fear and greed index. And today we are at number 9. But when was the last time we saw this number? Number 9. So let's go back to max. So change the chart to max. Uh, so go back. In February of 2026, we saw 9 in February. So there's one of the lowest. There was 9 in February. And also, oh, there was a 6 in February. There was 6. We actually go to 6 value and go. Okay. Did we go lower than a 6? Yeah, I'm not sure. I think the lowest was a 6. It's showing here. So this is the fear and greed index. And what this means is that at the maximum fear, you know, the highest fear possible, it means that you are approaching the market bottom. When you are seeing the greatest fear you've ever seen in years, people are scared, people are running away, packing their bags, you know, just know that you are approaching the bottom of the market. Can it go lower? Yes, it can definitely go lower. But what we know is that when you see the fear and greed so low, I think anything below 10, I would say, yeah, you are almost there at the bottom. If it's below 10, you are there at the bottom. Now let's go to 2022. So 2022, we had a 6 in 2022. We had a 6, and yeah, that was around June of 2022. We had a 6 around June of 2022. I believe that was also the bottom of the market. The bottom of the market was somewhere around between June, you know, the summer of 2022. So are we going to see the same thing in 2026? I don't know, but the market goes in cycles. So you've seen one cycle before, most likely you're going to see the same thing again. That's why we're asking the question today. And you can put it, let me know your own thoughts in the comment section. Um, is the 4-year cycle still alive in Bitcoin every 4 years? You see the top, you see the bottom every 4 years. Or have we grown past that? What is the size of the market right now? transited between the shakeup that happens every 4 years. So let's dive right into it. So we've seen the fear and greed in 2022. It was about 6 as of June of 2022. And we've also seen that today, fear and greed index is about 9. So you can put that on the same, side by side, all right? Okay, now if you go to the chart, this is a BTC chart on Binance. And let's go to the weekly. So there's a weekly time frame here. These are the moving averages. So you go on the weekly, um, okay, try this one. So this is a weekly chart. So we're going to go to 2022. So you can see here, 2022 June, I believe that was the collapse of the FTX or Luna, one of those exchanges that collapsed in 2022. So in June of 2022, you can see that that was where we started forming the bottom of the market. So started forming here. This was June 13, 2022. So between June and October, it formed the bottom. So between June and October, forming the bottom within 4 months. But the actual indicator that you were at the bottom or close was in June of 2022. And okay, now look at this. The price at that point was 17,622. That was the lowest as of June 13, 2022. Now, by November of 2022, November 2022, by November of 2022, we had the price came all the way down to 15,588. So there was not much difference if you ask me, from 17,600 to 15,800. So about $2,000 difference, right? Give and take, about $2,000 difference, which is that's not a big difference, you know. So now that brings us to the uh where we are today. So this is where we are today. There's a weekly chart. This is where we are. So you can see, let's put the RSI here, relative strength index. And also let's add the stochastic RSI. Stochastic RSI. Okay, stochastic. Great. So we are kind of bouncing right here. This was where we've the top of 2021 top. That's a 60 to $66,000 range. Now, so we're kind of bouncing in that area right now. So if you're joining us on TikTok, I'm sharing my screen here. So unfortunately, you can't see my screen, but those on YouTube, I can see the screen for today. Next time, I will ensure that TikTok followers can see the screen. So sorry about that. So the bottom right now is going to be somewhere between now, what's now, end of March. Okay. So we're looking at between now and June. So 3 months. So this is my own opinion. So 3 months time, you're gonna have the bottom. What does that mean? After every bottom, what happens? After every bottom. Would we have a question here? Invite the guys. Okay. Welcome everyone. We are on YouTube and we also live streaming on TikTok. So I'm seeing some comments here. Okay, so the bottom was formed in June of 2022, although there was a little dip below that in November, but it wasn't much, about $2,000 difference, which you can tell that that's really not much. I mean, if you buy something, and that point, BTC was around, say, 20,000, right? Or 18,000, between 18 and 16,000. So about $2,000 difference. So how am I going to tell the bottom for 2026? If it's going to, are we going to form the bottom 2026? And how am I going to tell is the bottom? Okay, now let's say chart. Okay, so let's look at some of the things that you look at right now. So you can see here, this range here. Now, if BTC breaks below this range, then there is going to be big trouble for BTC, like big trouble, right? So I'm going to draw the range. Let's go. The okay, brush. Okay, highlight that. Okay, yeah, maybe we can just highlight the range. So it's here. So here is the range. We are looking at between 70,000 and 51,000, or I would just say 50,000. So there's a $20,000 range, which that's what we are bouncing right now. So we touched 60,000 earlier. That was in February, 60,000. So you don't want to lose this range between that 50 and 70,000. And what are we seeing right now? What are we seeing? Let's go back. Okay, no, delete that. So let's go on the daily here. Go. So I'm going to draw a couple of trend lines here to show us what that means. So let's go. All right, trend line from the weeks. Let's change the color to white. Draw another one. Okay, change the color. So change the color as well as white. Okay, great. Okay, so you can see that when we broke this, let's draw a new one from here. See here. Stop there. Okay. Then let's copy this. Copy as a new one. I'm going to show you where that will go. So let's just put it here. If you don't know how to draw a trend line now, you can watch and learn. So watch and learn. Okay. So here, let's move this back. So draw another one here. And draw another one here. I'm going to show us what is happening. Okay, great. So you can see that there is a rising wedge, right? And when it breaks, it always breaks to the downside. So we look at this. Oh, okay, let's delete delete. Gonna extend this bear flag to the air. So look at this bear flag. When we fell from this level, it came all the way down to this level. Now, I'm going to copy the bear flag and move it here. Can you see what is happening? So you can see what is going on here. We are forming a staircase. So come on with descending staircase. It was here, down, sideways, down again, sideways. So what do you think was going to happen next? So let's see what will happen next. Copy. So you can see from the chart that we've broken below the trend line. So what that means is that it's going to form something like this. And the bottom of that is at 40,000. But that seems too low, right? Now, are we saying it's going to go to 40,000? I don't know. But from the analysis that we see on the charts, every time that you break down below the rising wedge, you go the length of the bear flag. We go the length of the flag. And here, if we put the length of the flag, we are looking at somewhere around 43, between 43 and 40,000. But that's like the full length of the bear flag, right? And look at this. Yeah, you can't make this up. It corresponds to the support of 2023, the previous support of 2023. Look at this. It corresponds to this level within 40,000 and 43,000 or 44,000. So there is a chance that this drop could go all the way to that level of 40 to 44,000 to form the bottom. And that could be the bottom of the market. That could be the bottom of the 2026 bear market. But that is just my own opinion. You have to do your own research. Okay, go out of here. So now we're on the daily time frame, and I've shown us that if we break below this support zone um, at 50, 57, break below 55K area, then it can go all the way down to 43 to $40,000. Now, is it going to go there just in one day? No, the market doesn't drop in one day. It takes, it goes in waves, in cycles. So it's not just one candle and you are there. It takes many candles. Look at this. This is daily charts, and there's a one candle here represents one day. So how many days? So okay, that's a good. Let's look at this. Uh, this range was from November to January. So between November 20, November 21st and January 22nd or 21st. So roughly 2 months, 60 days, we're in this range. And when we broke below the range, we went from 96,000 to 60,000. That's $36,000 drop from 96 to 60,000. So it was $36,000 drop. Now let's go here. How long have we been ranging now? So we we started this range in February. So that was February, 6th of February. And now we've broken below, we've broken below the range, just like here. Look at what happened here. We dropped below the range here. So that was 87,000 area. We dropped below the range, or 90,000 approximately. From there, we took a dump to 60,000. Now, as of this moment, we've dropped below the range also. We are now at 66,260. This range, I think the bottom was 68,000, right? Yeah, around 68,600 or so. So we are below the bottom of the range. What that means is that it's going to go all the way down to complete the move. It's going to go all the way down to complete the move. And you're going to watch the RSI. So the RSI right now is 40. So it's broken below again the center line of 50. So we're broken below 50. Now we're down at 40. So does that mean that there's still more downside? Most likely. Most likely, right? There could be more. Let's go here. So if you see, so how am I going to know there's a reversal? How am I going to know that this is the bottom? So anytime you see lower low in price action, so you form a price here, and then start ranging, and then another price drop, but then on the RSI, you form a low here, RSI moving to the low point here, and then recovers, 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 and then this other price drop here, the RSI also is going to correct, drops. But look at something here. We have lower low in price action, and then there's a higher low in the RSI. That's a bullish divergence. So that means you are almost at the bottom of the market. Have we seen that before? Yes. We saw that in 2022. Lower low in price action and higher low in the RSI. So you see something like that on the weekly chart. That means that the bottom is in. The bottom is in. So how am I going to know that? So you're going to see something like this. Uh, so if the price dips below 60,000 again and comes somewhere here, then we're going to have something like this on price action, forming a lower low. But then on the other side, we have a low here in February, but then there's likely going to be a higher low. So if it doesn't take out the previous low from March or from February or March thereabout, then you know that the bottom is in. So we've seen that before. Let's go to 2022. Let's look at this in 2022. Okay, okay. Let's maximize the screen so I can see well. Okay, great. So 2022, come back here. Okay, so you can see the price action. We had a low in June of 2022, 17,600. And then there's a lower low in November of 2022. Now, that's on the price action. But on the other side, you have, look at this, a low here, where you have a higher low. So that means the bottom is in. The bottom is in. When you see something like this, the bottom is in. You are at the bottom of the market. The bottom is in. 2018. So anytime you see something like this, just know that the bottom is in. So we saw that in 2022. So this one is a bullish divergence. Bullish divergence. When you see a lower low in price action and a higher high in the RSI, that's a bullish divergence. It means the market is reversing this. The bottom is already forming. You are at the bottom. It's no longer the time to run away, but it's the time to start looking carefully at what's going on in the market. So you are at the bottom when you see this. So if we form something like this in the summer, between now and June, so I give it, say, 3 months or 3 to 4 months time, if you see this on the chart, just know that the bottom is in. The bottom is in. And what's going to happen? then the market starts to recover. Market starts to recover. So let's go here. Gosh. So market starts to recover, something like this. You're going to see something like this, just like what happened in 2022. So this is August of 2020. Yeah, it's August of 2026. And then from there, another low, 56,000 by 2027. Then, I mean, it can take a year or two, but then you reclaim the high. Or there could be a sharp recovery. You know, when there's a sharp recovery, you're going to see something like this. It comes down. Oh, sorry. Let's take that out. Delete that. So sharp recovery looks like this. We formed that bottom somewhere here in June, and then you start recovering aggressively, aggressive recovery, and then and take out the high. So that it could happen. You know, it could go this way all the way to 2027 before the full recovery. That will take out 100K, or there will be an aggressive recovery this year, and by before the end of the year, it will take out that 100K or 126,000 top. So yeah, so you just watch the charts and you're gonna know what's gonna happen next. The chart will tell you about the news. The first time that I heard someone say that, I wasn't sure what he was saying, so I wanted to confirm and to check if it's actually true. If they show me the chart, and I will tell you the news. I was like, okay, is that true? And I was watching him carefully, and it did happen. No, you say something today on the chart, like, oh, what I'm saying on the chart, it means that this is going to happen. And guess what? The next week or the next day in the news, there's going to be this big announcement or something happens, and all of a sudden, all the market is shaking. You know, market is in trouble. But we've already seen that on the chart. So if you are very good with technical analysis, of course, there are times that you're going to be wrong. Absolutely. I mean, you don't know everything, right? So you may get some wrong. But the majority of the time, you're going to be right. So show me the charts and I will tell you the news. But what is going on right now? What we are seeing is that there's going to be another drop for Bitcoin. There's going to be another dump for Bitcoin. And for the market entirely, there's going to be a dump. I don't know how low that will go. Is it 40,000? Is it 50,000? I don't know. But there's going to be another one. Now, there's going to be a trigger. And the trigger is what is on the chart. But the news will override that. And the news will be like something, oh, there's this big announcement or something like this has happened, and everyone is scared, and they say, oh, the market has dropped, or but it's already in the chart. If you are paying attention to the chart, you're going to see that before the news. The news is just the cover for whatever happens on the chart. Okay, so yeah, we've seen that. Let's delete this one. Delete. Okay, let me put that on the chart. Okay, so I'm not sure which one you are seeing. Are you seeing this one or that one? The same thing happens. Like what applies to crypto, it happens to traditional market too. It's not in isolation. So this technical analysis is the same. You can go on the Dow Jones and analyze the same thing. You can go on, I don't know, Nasdaq, S&P 500, or even crude oil. The same thing happens because they behave the same way. It's just charts. And the same thing, Tesla. Let's look at the DX, the Dow Jones here. To look at Dow Jones, we drew this line in this channel in 2020, I think in 2021. Was it 2021? No, I think probably, yeah, somewhere there about 2022 or 2021. And we did mention at that time that anytime Dow Jones breaks below this trend line, there's going to be huge trouble for the market. Huge trouble for the market. If it breaks below the trend line here, you see the trend line, see the channel here. So, and this is another thing, there's a rising channel, right? So there's a high probability that it will break down. It will break to the downside. Now, in 2023, there was one touch here. There was one touch in 2022, another touch in 2023, another touch in April of 2025 during the tariffs announcement, all that era. Okay, so now we are back inside the channel. We are back inside the channel. And what is that telling you? Sometimes you complete the process. It's like a free fall. You complete that process and you come to the bottom of the channel. Does that mean that Dow Jones is going to come to 40,000 or 42,000? I don't know. But from the chart, what we are saying is that normally when you break below, then you complete it. So it's going to be somewhere here. Now, if it breaks this channel, then there's going to be huge trouble. Well, hopefully it holds. Look at the DXY. That's why on the previous live stream, we made, like we drew this on the previous live stream. That was in, I think, either early February or so. Yeah, I think early February or late January or early February. And I mentioned that the XY is going to recover to this trend line. Look at where we are today. I made this call. You can go watch our previous video in February, early February or later part of January. So we made this call. If you are joining on TikTok, I'm sharing my screen here. Unfortunately, you can't see, but YouTube folks can see my screen. If you're able to connect from YouTube, you will see the screen here. This is the same channel name as Kibler Learning Center. So if you're able to connect from YouTube, you can see the screen here. So this is the XY, the dollar index. And now we are at the trend line. What normally happens is that it can break above it or reject the trend line. If it rejects, it can just be a lower, a higher low. And when the higher low forms, the next time it will break above that trend line, it's going to test the upper trend line, which is this one. If it breaks this one, then there's going to be huge trouble. So that's around, our prediction was around February of 2027 that it's going to break. So if it breaks here, then there's going to be huge trouble for the market. So let's look at crude oil. Look at Nasdaq. Okay, so you can see again that Nasdaq is forming that terrible, terrible head and shoulder pattern. So this can be a shoulder, this can be head. So you're going to see something like this. This is totally my own opinion. It's not a financial advice. So on the Nasdaq, you're going to see something like this. This is the shoulder, left shoulder. This is the head, and then from the right shoulder, and that's a reversal pattern. So when you see that forming, that's around December or so. I don't know. Yeah, October, December. If you see this is terrible. This is not good. Not good at all. This is a reversal pattern. So what normally happens is that the market reverses. It's going to be a huge reversal. So have we seen that before? Yes. We saw that in 2022, between 2021 and 2022 for the NASDAQ. Okay, delete this. So between 2021 and 2022, we saw that on the NASDAQ. Let's delete these. Delete. Okay. So I'm going to move it here. So this is October 2020, or from the summer of 2022, sorry, 2021, we formed the head and shoulder pattern. It's a terrible pattern. It's a reversal pattern. You don't want to see it on any charts. Anytime you see it on a chart, it means you form the top. It's time to run. So look at it here in 2020, 2021 and 2022. So this was the left shoulder. This is the head. And then you form the right shoulder, and that's it. It's game over. When you see this, game over. And it dropped from here, 15,000 is the NASDAQ, all the way to 10,000. So 15,000 all the way to 10,000. Look at that drop. So that's trend based extension. So let's do the measurement. How many percent was that? That was a 30% drop. Now look at that, 30% drop from 15,000 to 10,500. And that's this the NASDAQ forming head and shoulder pattern in 2022. Now, if this process repeats in 2026, it's going to be terrible because it signals a reversal. It's a reversal pattern. And when there's a reversal pattern, you come all the way down to the previous support. And right now, there's one support here at 21,000 for the NASDAQ, but the main support is going to be this high here at 16,000. 16,000. So let's take the measurement again, take the ruler. So we go from here where it is right now to this level as a 30% drop as well. 30% drop. So does that mean you're going to see a 30% drop? No, it's just an analysis. So let's look at oil. Got oil here. So oil is above $100 again. We had that impulsive move in beginning of March, and you know why we had an impulsive move, right? No need to say it, right? You all know why oil is pumping right now. Okay, so oil is above $100, 102. Is there a chance that it could go all the way up again? No, to 120, to 124? Absolutely, yes, it can. Why? Because we saw that in 2022. The chart is about patterns, it repeats. So 2022, but does it mean that it has to play, candle by candle, no, but it's going to be similar. So it's not going to be candle by candle, but it's going to be similar. So you've seen that fear in the market, probably that's what is driving this. You've seen Dow Jones, S&P 500. Look at that. Terrible. Man, this is terrible. This is very, very bad. Now, looking at it with the head and shoulder pattern again, you don't want to see this on any chart. It's not good. Okay. So you've seen the fear and greed index. Oh, let's go to news on the US stock market. Dow Jones tumbles nearly 800 points. S&P 500 posts longest losing streak since 2022. The longest losing streak since 2022. Not good. So you're not seeing any good news from any of this, from what is happening in the market right now. Not good news. Okay, let's go back. Oh, look at the infinite loop again. Okay, so I'm going to shine. Let's go back to the presentation. Okay, go back to presentation. Let's chat here. So share new window. Okay, share. So BTC is ranging right now between the 60,000 to 66,000. Now we are trading below the channel, which is not good news. Anytime you trade below the channel, it's not good news at all. So go back. So the 4 year cycle, what does that mean? So we see that year one is the accumulation phase of it. That's what we see post uh post halving. I'll say yeah, post halving. You see that accumulation, crash, everything. Uh, Sorry, pre halving, not post halving. So then momentum starts to rise. Momentum starts to rise by year two. See the bull run phase, and year three you have the blow off top, and that's like what we saw in 2025, $126,000. Yeah, everyone thinking, oh, I think this is it, or it's gonna go 200K, 500K, $1 million for one BTC. People are just throwing out numbers, but of course, it's not going to happen that way. What else is here? So and then you follow the bear market, which is 2026 capitulation bear market. So and this happens every 4 years, and we've seen this repeat since 2020, since 2012. We've seen that 2012, 2020, 2016, 2020. So that's every 4 years. There's Bitcoin having 2016. And sometimes people associate this with the US election. They say, oh, it's because of the election. That's why it's not really the 4 year cycle, it's not really the halving. Whichever position you are taking, it means that we see the same thing happen. Either you are siding with the election cycle or you are just siding with the regular BTC halving. It's basically the same thing. Okay. So if this is true and if it repeats, it means that you're not going to see another top until 2029. We saw the top in 2021. Last top was 2025 last year. So if the 4 year cycle repeats, then the next top is going to be 2029. And every top, the um it doubles or triples. In 2021, we saw what was the top in 2021? 66,000, 69,000. Yeah, they're about 66 or 69. Now, 2025, we saw 126,000. It didn't actually double, but yeah, almost there. So what does that mean? If the 4 year cycle is true, then that means that in 2029, you're going to see something like 220,000 Bitcoin or 240,000 thereabout, 250,000 thereabout. So, and that is not bad because if at the bottom of this correction, if it corrects all the way down to, say, let's take a conservative value here, $50,000, and then by 2029, then you are seeing $250,000. That's 5x. That's 5x from here. You don't see that on the stock market. 5x in 3 years, or yeah, 3 years from 2026 to 2029. You see a 5x. So yeah, that's just my own analysis though. It doesn't mean it has to play this way. No. Okay, so let's look at here. So we've seen historical patterns, uh, 45, 45 to 50% drawdown. In 2013, we had 85% drawdown. That means from the top to the bottom, 85% drawdown. In 2017, we saw 84%, 84, 84% drawdown. And 2021, we saw 78% drawdown. And of course, you have to also compare the market capitalization at those points. 2013 was very small, little market cap. 2027, it was not up to 1 trillion. I think it was below. I'll have to look at the number. And 2021, look at 2021, what was the market cap? Maybe around 1 trillion. But 2026, the market cap was about, I think, 3 trillion. And now, what's the market cap? Yeah, right now, it's probably below, I don't know, I have to look that up, but it's no longer 3 trillion. I know it's way below there. So, but we are only at 46% drawdown, in ruler. The drop is 46% drawdown. And historically, we've seen historical values, we've seen one, two, three, one, two, three. So one, two, three in the 80s and 70s. Does it mean that this is going to be also in the 80s and 70s? Because right now it's at 46. So 46, if it goes to 80 drop, 80% or 78% drop, what what will be the price at that point? See, so I'm going to show us what the price will be at that point. So if we move again to that 70 to 70%, go back. So from the top to the bottom, let's see, top to the bottom, my ruler. So take the ruler here from the top. Then if you go to the bottom, 80% takes you to 24,000. That's 80%. Then 40, 67% takes you to 41,000. So historically, we've seen that between 80 and 78%. But some people are saying, oh, because of the size of the market today, the ETFs, institutional investment, and everything that is going into crypto market, there's a lower probability that it's going to drop to this low. But we're just following historical patterns here. We're just following the data. And the data is saying that if it goes to 60% or 70% drop, the price is going to be around $38,000. That's yeah, between $36,000 thereabout at 70% drop. But let's take 60% drop, which aligns with our previous analysis, somewhere at $50,000. Yeah, around that $50,000 mark. Okay, so we've seen that. Let's go infinite loop. Stop sharing. So share. Okay, let's finish the. So yeah, supply shock. We've seen the halving in 2024. Is this a correction? Is it a capitulation? I did a video before explaining this too, between difference between just normal correction and a capitulation. So you can check that out. Let's go next. So the case for an evolving cycle that, of course, because of the ETFs, institutional money that is coming in, we believe that the market has grown. It's maturing, unlike 20, 2013 or 2017, when the market was very small. The size of the market capitalization was small. But now that it's maturing, we believe that it has grown to the size that is a little bit absorbing some of the shocks from the correction, and that there will be no capitulation like we've seen before that will bring us to the 80% drop. So, hey, this is just data. Next up, we have so we've seen the net ETFs inflows since launch about $54 billion, and 8.4% of the total supply is in ETFs. Look at that. And of course, the ETF has also reduced the volatility, like I said, because the market is maturing, is absorbing the shock from these drops. We are absorbing the shock. Okay. So next up we have, so within the correction, I've shown us the chart on the S&P 500. Uh, we also see the correlation with stock market and gold, you know. So it's beautifully going to behave the same way, the same pattern, what we see in stock market, what we see in gold. Is it going to be the same or is it going to be different? Uh, so whatever happens to the stock market is going to affect the crypto market, right? It's not in isolation. Some people argue that crypto is supposed to be, the safe haven, but you have to look at the bigger picture. You have trillions of dollars in the economy and the stock market, and you have below just 3 trillion in crypto market. So if the market that has over $20 trillion can hold the shock that comes to the economy, how much more? It's just basic math, right? How much more something that is below 3 trillion. So crypto will also be impacted. Ski blend. So what is our playbook here? Of course, you need to have your own strategy, your own investment plan. You don't follow the crowd. You don't listen to people telling you this is what's going to happen. Like what I'm doing now, I'm sharing my own opinion. You have to do your own research. So write down your own plans, do dollar cost averaging. You can be buying at regular intervals. Risk management is key. Build reward skills. Project management, like I always emphasize on this channel, you can't put all your eggs in one basket, right? So you have to build reward skills. You are in crypto, understand AI, understand project management, negotiation, understand problem solving. Those are the things that will help you. Reframe dips as tuition. So when you see the dips, of course, market correction teach patience and strategic thinking. So you have to think ahead. Remember what I told you before? Show me the charts and I will tell you the news. Okay. So yeah, I've mentioned almost everything on this slide. If you need the slide, just send me a message. I can share it with you. I'm just going to skip over here. So yeah, discipline is very important. Discipline compounds. You have to discipline yourself. You have to stay committed. Whatever you plan to do this year, stay committed. It must not be in crypto market or whatever you're doing. Discipline creates wealth. It's a discipline that builds the compound effect. So whatever you are doing, do it consistently over time. It compounds. Consistency compounds returns over time. So you have high return, high consistency. It's from discipline. Okay. So that is all that we have for today. Thank you so much for joining us. We're going to be live again. What is today? 29th. Okay. So this is the Easter week. So probably maybe live again, or if not, then after Easter, maybe next 2 weeks. But will let us know. We'll put a notification here so that you know when we are going live. You can join us. Either you are joining on TikTok or you are joining on Facebook or you are connecting on YouTube, join on YouTube or join on Instagram. Anyway, you have to join inform. We are going to be live in those on those platforms. So thank you for today. God bless you for joining us, and you have a great week. And remember, this is just the beginning of the market correction. If there's going to be a correction, a deeper correction, or this is near the bottom. If we are following what I just analyzed and not the regular 4 year cycle. If it's going to be 4 year cycle, then there's still more pain ahead. If this is, a new territory, and then know that the correction is almost at the end. So thank you. I'm going to stop here for today. You have a good week.